To encourage the use of renewable energy, Universitas Sebelas Maret has a Center for Excellence in Lithium Battery Science and Technology and Electric Motorbike Innovation. Universitas Sebelas Maret implements UNS Green Campus governance through emission-free days, waste recycling programs, and dye-based solar panels to support sustainable environmental management. Universitas Sebelas Maret has been developing startup, business incubation, and entrepreneurship programs to eradicate poverty. In education, Universitas Sebelas Maret deploys around 1,800 students every year to carry out teaching programs in schools. And finally, to contribute to the health sector, Universitas Sebelas Maret has a nonprofit teaching hospital to serve the community. Active partnerships and strong collaborations have become inseparable parts of Universitas Sebelas Maret. Our international partnerships create ample opportunities for student and staff mobility in collaborative research and teaching activities. International collaboration helps to give a global perspective on learning to
To all of
address
the
global
participants,
challenges
may
while still
we have
functioning
your
in a national
attention
environment
because the
based on
event is
potential
about to start.
global
I would like to inform you just to fill in the upfront seat first.
Together we can anticipate.
Thank you very much.
We gladly welcome you to explore and experience our program and enjoy our campus life, which depicts a blend of cultural power, professional life, and technological advancement. Universitas Sebelas Maret.
Maaf, kamu Gina ya?
Bowo,
Gina, apa kabar?
long time no see.
Lama banget. Kamu sendiri kan? Join meja aku yuk.
Boleh, boleh. Kamu ngapain sendirian di sini?
Tadi itu aku habis job interview
Really? Di mana?
di LPS, My Dream Job.
LPS.
Lembaga Penjamin Simpanan. Kamu lihat semua orang yang ada di sini, pasti setiap orang yang ada di sini punya simpanan di bank kan? Baik itu bentuknya giro, deposito, atau tabungan. Pokoknya setiap kegiatan ekonomi dan transaksi kita nih, itu selalu melibatkan yang namanya bank untuk mencatat dan menyimpan transaksi kita. Dan LPS ini, Gin, mulia banget. Karena LPS ini menjamin simpanan kita di bank kalau nih tiba-tiba uang kita atau dana kita itu hilang. Atau tiba-tiba banknya bermasalah. Jadi LPS yang menjamin.
LPS keren dong.
Keren dong, dan banyak banget ya nasabah bank yang tertolong sama LPS ini. Jadi kita tuh nggak perlu khawatir kalau punya simpanan di bank. Kan ada LPS yang ngejamin.
LPS ada sejak kapan sih?
Aku liatin kamu sejarahnya LPS, kamu nonton ini. Sambil kamu nonton, aku cari cemilan dulu. Oke?
Tahun 1997 sampai 1998 terjadi krisis ekonomi di Indonesia. Kepercayaan pada perbankan merosot drastis dan terjadi penarikan dana besar-besaran oleh masyarakat. Stabilitas perekonomian nasional berada di ujung tanduk. Untuk mengatasi krisis, pemerintah mengeluarkan beberapa kebijakan, di antaranya memberikan blanket garansi atau jaminan atas seluruh kewajiban pembayaran bank termasuk simpanan masyarakat. Dalam pelaksanaannya, blanket garansi memang dapat menumbuhkan kembali kepercayaan masyarakat terhadap industri perbankan. Namun, ruang lingkup penjaminan yang terlalu luas ternyata membebani keuangan negara dan menyebabkan timbulnya moral hazard baik dari sisi pengelola bank maupun masyarakat. Akhirnya, program penjaminan yang sangat luas lingkupnya tersebut digantikan dengan sistem penjaminan yang terbatas. Pada tahun 2004, pemerintah Indonesia menerbitkan Undang-Undang Nomor 24 Tahun 2004 tentang Lembaga Penjamin Simpanan. Setahun kemudian, yakni pada tanggal 22 September 2005, LPS mulai beroperasi.
Gimana?
Menarik banget ya videonya.
Ya kan, bagus banget kan? Nah, aku masih punya banyak lagi kalau kamu mau nambah.
Mau, tapi gimana kalau kita pindah tempat?
Ayo, boleh. Kita cari yang outdoor ya. Ayo.
Kalau di luar negeri itu ada LPS juga nggak sih?
Ada, tapi namanya bukan LPS. FDIC, Federal Deposit Insurance Corporation. Jadi ada 100 negara di dunia yang punya program yang sama kayak LPS ini. Dan mereka itu tergabung dari Asosiasi Lembaga Penjamin Simpanan Internasional. LPS hadir untuk
Menjamin simpanan di bank,
membuat kita tenang.
hati tentram.
LPS,
Sahabat Nasabah Indonesia.
Tak perlu berpikir dua kali untuk menabung. Aman, ada LPS. Ada lembaga penjamin simpanan untukku. Aman, ada LPS. Gapai cita mulai dari menabung. Aman, ada LPS. Kepastian untuk melangkah maju. Aman, ada LPS.
Hai Sobat Rupiah, perkenalkan saya Edo.
As a relationship with the bank, they are coming to the bank and they are they are going to be now have to pay more if they do not behave properly. So in this case, the bank is doing credit rationing and creating a scenario to push the banks to behave, the borrowers to behave properly. And so we also go and look at the other component, that is it by doing the credit rationing or the banks are monitoring more. Monitoring is that they go and decide to give a short-term loan so they can check a lot frequently, or they provide a smaller amount of loan, they give a covenant, which we check many of these other contract one by one, and we do not find overall that there is a contract, non-financial terms or the monitoring terms, we don't find in result. So sometimes it is okay to not find a result because we cannot force the data to tell exactly what we want to see. So here we did not find anything. So in our case, our job is to find out and say why it happened. We did not find anything. So we come with the conclusion to say that these are proxy for monitoring. The other one is proxy for credit rationing. So the banks are not using monitoring as much to achieve their goal. They are doing more work from the credit rationing. So we continuously look at this issue because somebody would come. So before I go there, so what happens is here we create the sample now in such a way we create a pair. So before we looked at overall all the borrowers before, all the borrowers afterwards. Now we take exactly who borrowed and who borrowed before, who coming later. We create a match between the bank and the borrower. We find the same result. More or less, I'm trying to say is that the research went more strict to talk about how these particular things work, and we find consistent result. So then what we do after that, we ask this question and say, why the borrowers would go to this bank? Borrowers can go to some other bank and say, why do I have to be listening to you? Why do I have to pay you higher interest rate now because I am polluter? I can go to other bank. So usually the banks are not charity business. So banks, if the banks find out that you are a client of other bank, you suddenly don't go to them, you coming to me, the banks get alerted. So they are not necessarily going to say, oh, come on in, we're going to give you the loan. Possible in a market competition, they might be taking a market share. So we go and see that if the banks are pushing them, if they really have an option to go somewhere else, they would not have a credit constraint. Means they would not have a problem with money. They can go somewhere else. So we actually follow all the borrowers and really go and create some sort of measure. Scores are available. These scores are called, Kaplan-Zingale score, Whitehead-Wu score. These names are not important. What is important is it measures, do you have a credit constraint? Do you have a problem of money, or you don't have a problem of money? And we find out the banks that are the clients of these banks, who are not getting, doing the right environmental practices as the bank wants, this group actually has a credit constraint. So here, what I'm trying to share with you is that you probably would ask me a question that how come bank can manage its borrowers through its own policies, because the borrower can go to other bank. And we are trying to say that it is not straightforward, simple thing. Because if they go to other bank also would charge them higher prices. Other banks would also would be worried about their payment and so on and so forth. So we show the mechanism that here they are credit constrained. So altogether, we have more things to do, but what we have done, we went and looked at every borrower's. So we went to every borrower's annual report, in conference call report, and each borrower, we go and try to do a machine learning, to do a textual analysis, to see all the TCFD main 4 policy that the banks have committed to, do the annual report of these borrowers, talk about these particular 4 issues. And we find 16% of the borrowers, not only they are listening by paying higher interest rate or paying adhering to the environmental practices, we find in their own activity, in their own reporting, they are adopting more and more related to the TCFD role. So in some sense, we are seeing some evidence that bank is not only creating some pressure through the interest rate and others, they're actually changing some sort of behavior of these borrowers, because in their own reporting, in their own conference call, they are creating a more languages that are consistent with some of their lenders. So in some sense, lenders are not the owners here totally. Lenders are simply lending. It is not an institutional investor. It is not a stockholder. They are lender, they are debtor. You don't have to listen to them as much. You can go to the bond market and so on. But we're finding that because of the reputational damage, because of the credit constraint scenario, these borrowers are listening and they are changing their behavior. It is sort of the example I gave you, that if I am a professor, I let you evaluate me. Actually, this commitment is making you to work harder, and you are doing better because I am making myself open to your criticism. So you now become more responsible and you're not getting spoiled. And so I can evaluate him. You actually yourself doing better. And that's the overall story we are trying to say through the story of the commitment to environment, through the bank and others. So in short, we go through the whole process again by this and get similar result. So overall, if you can say, what I am trying to tell you here is that usually the conversation is, a lot of time we do research like this, if I have taken some commitment, I have taken them strategy, does it affect my performance? So most of the research we have done in the past is like this. I'm an organization, I'm an individual, I'm a bank, I have taken this policy, this is my asset liability management, does it affect my performance? Here, the interesting part to us is that here it is not a direct relationship. Here, a group of banks decided to voluntary disclosure. That disclosure has some sort of commitment. This commitment makes them to be more self-disciplined about what they do in their own lending. And that decision of their own lending has created their borrowers to become more and more environmentally focused, environmentally better. So this overall research come to a point in a policy issue. The policy issue is that do you need sometime mandatory disclosure, or you need do you need mandatory disclosure, or voluntary disclosure can work? And we are trying to put little bit of debate in this particular component to say sometime it may not need the mandatory. Even created a disclosure that is voluntarily has some real effect. You can see the effect. And this is the crux of the research that I shared with you. Thank you for the opportunity to talk to you. And the last result here is somebody would say, all these things banks are doing, are they making money? I'm showing here some result that the real effect wise, they still are profitable. They're still doing their businesses reasonable. In some sense, they are not necessarily in trouble because they are going out of their way to see others are compliance with environment. So maybe this mechanism, somebody would debate, people who are in the environmentally committed individuals who are very much into green, they would simply say, oh, you are again coming in and trying to give a way out for businesses to do voluntarily. We need to do mandatory. And we are not against mandatory. We are simply saying that mandatory may not work immediately. A lot of the lobbying power and a lot of the money would go into the Congress in the US context. You would not find something mandatory too quickly. So might as well we start with voluntary disclosure. It might have a positive effect. Thank you very much.
Thank you very much, Professor Iftikhar Hasan. Let's give a round of applause for Professor Iftikhar Hasan for the very captivating and comprehensive keynote speech regarding the climate change and how we can see that the lender intention to just disclose about the climate change related information can change also how the financing works. And before proceeding to the next plenary session, so after we will have the plenary session with four distinguished speakers from the representative of Bank Indonesia, from LPS, Lembaga Penjamin Simpanan, or Indonesia Deposit Insurance Corporation. We will also have Professor Bruno Sergi from the University of Messina, Italy, and also Harvard University. But last but not least, we will have the representative from the University of Malaysia, Professor Siong Hok Loh. And this session will be moderated by Dr. Putra Pamungkas. He is the head of department of the business digital and at the Faculty of Economic and Business, Universitas Dasmaret, and also the chairman of the UNS FinTech Center. He obtained his doctoral degree from University of Limoges, France. And without further ado, I would humbly invite Dr. Putra Pamungkas to proceed to the stage.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. So, Professor Irwan Trinugroho, Professor Iftikhar Hasan, ladies and gentlemen, distinguished guests, students, and all of the participants in this international conference, a very good afternoon to you and each one of you, and welcome. I'm honored here to stand before you as a moderator today in the International Seminar of Global Economics and Finance Outlook 2024. What can we expect? So my name is Putra Pamungkas. I'm thrilled to guide you guys through this event that promises to provide valuable insight. So in today's interconnected world where economics shift reverberally to the globally, understanding the trends and force shaping our future is paramount. So our esteemed panel here, panel speakers, comprise of academics and experts who will shed the light on the key factors that influencing global economic outlook for 2024. Of course, with a lot of perspective from Europe, US, Indonesia, Malaysia, right? So as we embark on this discussion together, I encourage you all of the participants here, students, that can actively participate and share your perspective also, share and engage in this discussion. So the committee will provide some, door prize, for 10 or 15 people here, so you can, engage and ask the questions. Okay, so they will be offered, very good souvenirs. So before we delve into our discussion, I would also extend my heartfelt gratitude to the Central Bank of Indonesia, Bank Indonesia, and also the Lembaga Penjamin Simpanan, Indonesian Deposit Insurance Corporation, for their invaluable support to make this event possible. So without further delay, so I would like to invite our speaker first speaker, Professor Bruno Sergi, to come to the stage, and then Bapak Anto, Pak Duyanto, also to the stage. And then Bapak Herman Sairudin, PhD, and also Professor Siong Hok Loh. So let's the discussion begin. I would like to welcome the first speaker, Professor Bruno Sergi. Professor Bruno Sergi is a professor of economics in Messina, Italy, and also instructor at Harvard University. His teaching portfolio at Harvard includes the course on development economics, emerging market, and his current research cover the political economy, the institutional transparency, corruption, and global development practices. So he also in this morning, have a MOU with us. He chairs and co-direct the LEAD, right? The Labs for Entrepreneurship and Development, based in Cambridge, USA. So he holds PhD in the economics from the University of Greenwich Business School, London. So, Prof. Sergi, you will have like 15 minutes to present your speech, right? Thank you.
Yeah, thank you. I'm very happy to be at Universitas Belus Maret again, and to address this distinguished audience about a very important topic, 2024. How 2024 will look like globally and in Europe as well. So I was given this topic the other day. I come up with 21 slides, but I will try to make a very long story short. Okay, can we have the remote control? Wow. Okay. So this the analysis today is split into three different parts. The first one is about a global overview of what is going on and about projections regarding 2024. The second part is about the geography of the global economy, because a geographical understanding of 2024 and even beyond is very important for policymakers and to understand what will happen in the future. And the third part is about Europe. What is going on in Europe, what the EU approach is about the future. And the very last part of the analysis is about Mario Draghi, a former European Central Bank president, who is writing a report, an economic report for the European Union, advising us on what to do next. So his perspective is equally important for us and for you to know. So the first slide is about the global economic outlook, 2024. And the global growth is projected to stay at 3.1% in 2024. So the global economy will keep growing in 2024 and 2025. However, a main issue in the past was the control of inflation rate globally and regionally. And at the global level, inflation rate, the projection of inflation rate is to fall to 5.8% in 2024, and to 4.4% in 2025. So this is good news for the global economy. A very good news for the global economy. So the global economy is able to expand and will expand in 2024. So this is about the Asia Pacific. I think your main focus is on the Asia Pacific. And this region will be a driver of the global economic growth. You can see some data about GDP growth in your region. It's a very dynamic region. And there is also the ability of central banks in the region to keep inflation rate under control. So to keep inflation rate under the targets, you have a inflation targeting policy that is a very successful monetary policy strategy today. And this is another good news for you. So you will, your region will be the key driver of the global economic system today, in 2024, 2025. But let me go and look at Europe. So why Europe is, I don't know what this, okay, this is Europe. So the latest information about Europe, GDP growth in Europe, and inflation rate in Europe, and the ability of the European Central Bank to keep inflation rate under control. And this is not good news for us. The European Union economy, European Union countries are not able to keep on a proper track of economic growth. Economic growth in Europe is slowing down dramatically. And although there is and there was some sort of good control on the inflation rate, but still the inflation rate is quite problematic in the Eurozone. And the president of the European Central Bank, Lagarde, does not want to decrease the interest rate at all, because she is still worried about the long-term dynamic of inflation in the Eurozone. So while in the past the Eurozone and the EU was a driver of global economic growth, of innovation, of good strategies, today the European Union is no longer strong at GDP growth. That's why the European Union has asked the former European Central Bank President Mario Draghi to report to the European Union and to get an advice, an economic advice from a former central banker. He's a very well-known Mario Draghi, and especially in Europe. But these slides are about a comparison of the global economy, the Asian economy, and the European economy. This is an overview of what we need to know about 2024 and 2025. even 2025. The second part of the analysis we need to know and to work with is the geography of the global economy. The geography is equally important, and technology, because we cannot understand what will happen in 2024, so the forecast, 2024 and even beyond 2025, without understanding what is going on globally, and especially in the global south. Indonesia is part of the global south. It's a very powerful voice in the global south. And policy making in Indonesia, as well as in many other countries in the global south, have to look at these new dynamics and how geography will be able to shape the future. So I have a couple of slides about this geography, the economic geography of the global south and of the global economy. Because the global south today is representing more than 50% of the global GDP. So there is a shift of power, a shift of economic power from the west to the east, to the south, especially the southeast. So this is the BRICS bloc, and the BRICS bloc or the BRICS forum is expanding and will become a kind of political superpower as well. Many countries would like to join in, and BRICS was made up of 5 countries until the end of 2023. Today there are more countries into the bloc. And Argentina, the new president of Argentina, Javier Milei, has at the very end of December 2023 said, no, we no longer want to be part of the BRICS bloc. But no, apart from what and why Argentina left this membership at the very end of the day, but still is an important part of the analysis, the BRICS bloc. Then maybe you can share the PowerPoint with your students. And okay, this is one part of the analysis. Another part of the analysis is technology. Technology is and will be a big driver of economic growth. Economic growth today, in 2024, 2025, 2030, will no longer be driven by just capital and labor. We need something more to understand growth. And something more is technology and knowledge, human capital. And you are part of the new human capital. Your country is investing on you. You will become the leader of the leaders of Indonesia in the future. And your country will become more competitive because of the countries investing on human capital. So this is the geography of the digital economy. The digital economy is today concentrated in 2 countries, China and the US. The US and China are investing on the digital economy, let's say technology. For example, among the best and the more productive universities in the world in terms of patents are Chinese universities. So if we want to have a full understanding of the global economy in 2024 and 2025, 2026, apart from GDP projection forecasts, we need to know what is behind GDP growth. So the digital economy is a kind of proxy to understand the global economic system. So keep in mind this BRICS bloc, the global south, and the digital economy. The digital economy will help also countries to leapfrogging. According to Professor Rostov, the global the economic growth, countries' economic growth go through a stepwise system approach. There are 5 steps. But the technology will be so helpful for countries to speed up, to catch up, to speed up the process, the economic process, the catching up process, and eventually to skip some of these steps, the leapfrogging. This is the leapfrogging approach. And I remember that in January, I was talking to my students, and the richest guy in the world was Elon Musk. So the Bloomberg Billionaire Index, there is also the link to the Bloomberg Billionaires Index, is an index that updates the net wealth of people, of the richest people, daily. So in January was Elon Musk. A few days ago was Jeff Bezos, the guy who owns Amazon. But today, yesterday, we have Bernard Arnault, who is the richest man in the world, the richest person in the world. So among the top 10 people, the richest 10 people, most are involved with artificial intelligence and technology. So keep this in mind. So the global economic growth will be driven by technology. And so Elon Musk and Keynes, 2 different ways to understand economic growth in the future. So let me skip over a few slides. And so interesting was the Professor Keynes' statement of 1930 that technology advancement would mean we would eventually work just 15 hours a week. And it seems that the statement was not true because we are working more and more. And especially in the technology field. And this is a very interesting book written by sociologists. And this is a book and written by sociologists. He teaches in California. And according to his book and according to data, statistical data, 65% of STEM graduates do not work in STEM jobs. And a large share of those who work in the field stay at work very long, maybe up to the very end of the day. So are Stakhanovists of the job market. So this is part of the story. I mean, how the global economy, what the global economy will look like in the future. So the European approach. In Europe, we are aware about the issue of competitiveness. We need to be more competitive. According to Professor Krugman, competitiveness in the long run is everything for a country, for a company. So we need to invest on our competitiveness. And technology become the centerpiece of the European Union approach. And there are quite interesting programs, initiatives, investing on technology. The European Union would like to transform our societies and our people into good brain for understanding and working with the technology. You see the new approach, human capital, connectivity, digital public services, integration of digital technology. So this is the basic idea of the EU on how to address the challenge of the future, the economic future. And the very last step, let me skip this one, the very last step of the European experience is Mario Draghi, so the former European Central Bank president. Is writing a big report for the European Union, and I'm not able to go through this slide though, because I don't know. Anyway, I'm getting old. Yeah, I'm getting old. And anyway, the idea of Mario Draghi is that the European Union needs to invest, or European Union countries need to invest up to 500 billion euros per year. And the strategy is to invest on the green economy, to invest on defense, and on defense there are quite a lot of criticism in Europe, and on the digital economy. This report is still in a draft stage, so you need to submit the final report to the European Union, to the Commission. But this idea is very simple. So 500 billion euros per year is the gap between what we do invest in Europe today and what the US does invest in the EU, in the US, in the United States. And that about the green economy and the digital sector, I mean, is something that we agree with, I mean, all across Europe. There are quite a lot of criticism about the defense sector, and but maybe we can discuss and I can take your questions after the end of my colleague's speech as well, or maybe I can take questions right away if you have them. Okay, thank you.
Well, thank you, Professor Sergi. So they highlighted that what you are talking about is about what to expect is that there will be new power breaks. Of course, digital economy will enhance, progressive, than what you said in European green and something like that. So, of course, there will be a lot of questions to you, but after all of speakers have spoken, Prof. So, from Europe, we can fly back to Indonesia, and still we contemplate to the question what's to expect in 2024. So, we have second speaker, Bapak Duyanto Cahyo Sumirat. He is the head of the Regional Bank Indonesia Solo. So, previously head of the Bank Indonesia Central Sulawesi, right? So he holds Master in International and Development Economics from Crawford School of Economics and Government, the Australian National University, Canberra, Australia. So, same back, we have 15 minutes to you to deliver the speech.
Thank you, Dr. Putro. Distinguished speakers, Professor Bruno, Professor Iftikhar, Pak Herman, and Professor Law, and also ladies and gentlemen, good afternoon. Assalamualaikum warahmatullahi wabarakatuh. Thank you for the opportunity to share my presentation about Indonesia economic update and policy response. Since Professor Bruno already explain extensively about the global economy as well as the European economy. I will just go directly to the domestic economy in Indonesia. So the slide, is it ready? Okay. 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 We will go directly to slide 8. Indonesia national economic growth surpassed the previous projection. The growth was recorded at 5.04% year-on-year in the fourth quarter of 2023, up from 4.94% year-on-year in the previous period. The increasing growth in the fourth quarter of 2023 is supported by almost all GDP components. By sector, economic growth in 2023 was primarily supported by mobility-related sectors such as wholesale and retail trade, transportation and storage, as well as accommodation and food service activities. In terms of region, solid national economic growth was reflected in most Indonesian regions, led by the Sulawesi, Maluku, Papua, or we call it Sulampua region, followed by Kalimantan and Jawa. Overall, the 2023 GDP recorded strong growth of 5.05% year-on-year. Bank Indonesia projects economic growth to increase in 2024 within the 4.7 to 5.5% range. The outlook is based on improving export performance in line with higher global economic growth, coupled with persistent domestic demand and supported by economic confidence. Household consumption and investment, particularly non-building investment, must be nurtured to support sustainable economic growth. Bank Indonesia will continue strengthening its policy mix, particularly through macroprudential policy and payment system policy, in synergy with fiscal stimuli implemented by the government to foster economic growth, particularly from the domestic demand side. Balance of payment record surplus in 2023, where BOP performance demonstrated solid external sector resilience despite elevated global economic uncertainty. Indonesia's balance of payment in the fourth quarter of 2023 recorded an $8.6 billion surplus, improving significantly from $1.5 billion deficit in the previous period, supported by an expanded capital and financial account surplus coupled with a consistently low current account deficit. The current account registered a low deficit, 0.4% of GDP, underpinned by improved demand and international commodity price. The capital and financial account recorded a significant improvement in the reporting period, from a $0.1 billion deficit in the third quarter of 2023 to $9.8 billion surplus in the fourth quarter of 2023. In the 2023, the BOP booked a $6.3 billion surplus, up from $4 billion surplus in 2022, primarily supported by a strong capital and financial account performance. The trade balance surplus, and foreign capital inflows continue. Surplus BOP performance is projected to continue with a $2 billion trade surplus missed in January 2024 due to strong non-oil and gas export. Despite persistent global financial market uncertainty, foreign capital inflows to domestic financial market have been maintained, as reflected by a net portfolio inflow of $3.1 billion recorded in the first quarter of 2024. The position of reserve assets at the end of January 2024 remained high at $145.1 billion, equivalent to 6.6 months of imports or 6.4 months of import and servicing government debt. Overall, Bank Indonesia expects a BOP surplus in 2024, underpinned by a persistent capital and financial account surplus in line with maintained foreign capital inflows, given the positive investor perception of the promising domestic economic outlook, along with the attractive yield of financial assets for investment. Meanwhile, Bank Indonesia also projects a narrow current account deficit in the 0.1% to 0.9% of GDP range. Rupiah stability has been maintained in line with the stabilization policy instituted by Bank Indonesia. After depreciating 2.43% in January 2024, the rupiah bounced back in February 2024 to regain 0.77% point-to-point in value. Rupiah appreciation was attributable to the stabilization policy implemented by Bank Indonesia, foreign capital inflows to domestic financial market in line with positive investor perception of the promising economic outlook and maintain stability, as well as attractive yield of financial asset for investment. Consequently, the rupiah has depreciated just 1.68% from the level recorded at the end of December 2023, thereby outperforming the Thai baht, Malaysian ringgit, and South Korea won that depreciated 5.31%, 4.27%, and 3.69% respectively. Moving forward, rupiah stability will be maintained while tracking an appreciating trend in line with maintained foreign capital inflows and supported by Bank Indonesia stabilization policy and optimizing the pro-market monetary operation strategy through the SRBI, SVBI, and SUVBI instrument. Moreover, Bank Indonesia will continue strengthening coordination with the government, banking industry, and business to support the effective implementation of instruments that retain the proceeds of natural resource export in accordance with the government regulation number 36 year 2023 concerning the foreign exchange proceeds of export and the exploitation, management, and or processing the natural resources. Low inflation has been maintained within the target 2.5% plus minus 1% target corridor. Consumer Price Index inflation in February 2024 was recorded at 2.75% year-on-year, rise from 2.57% year-on-year the month earlier, which is within the 2.5 plus minus 1% target. Milder inflationary pressures were observed in core inflation as a tangible outcome of consistent pro-stability monetary policy by Bank Indonesia, together with close policy synergy between Bank Indonesia and central and regional government. Core inflation stable at 1.68% year-on-year in February 2024 as a corollary of low imported inflation in line with rupiah stability, anchored inflation expectations to inflation target, and massive economic capacity in response to domestic demand. Administered price inflation down from was recorded at 1.67% year-on-year, down from 1.74% year-on-year the month earlier, in line with minimal government intervention to adjust administered price. Volatile food inflation increased to 8.47% year-on-year from primarily as a consequence of rice and red chili due to impact of El Nino, along with seasonal factor and a shift in the planting season. Therefore, inflation control synergy through the TPIP and TPID teams by strengthening the GNPIP movement in various regions will be strengthened to manage food prices. Moving forward, Bank Indonesia is confident inflation in 2024 will remain low and manageable within the 2.5% and plus minus 1% target corridor. Bank Indonesia continues strengthening its monetary policy response and innovation to increase policy effectiveness in terms of controlling inflation and maintaining rupiah stability. We jump to the next slide. The banking industry maintained competitive interest rates given adequate liquidity in the banking system and PLR transparency policy to increase interest rate efficiency in the banking industry. Credit growth driven by robust supply and demand. The one-month term deposit rate and lending rate remain low and stable in January 2024 at 4.62% and 9.30% respectively. Credit growth in January 2024 was recorded at 11.83% year-on-year. Ample liquidity in banking industry was reflected by a high ratio of liquid asset, a third-party fund at 27.79%, and supported by macroprudential liquidity policy incentives from Bank Indonesia, specifically for bank channeling funds to priority sectors. In addressing the funding gap in line with a 5.8 growth in third-party fund and to maintain lending capacity, banks have introduced two main strategies, namely the reallocation of liquid assets from securities, as well as strengthening non-TPF funding. Credit growth was primarily supported by investment and working capital loans, growing by 13.39% year-on-year and 12.26% year-on-year respectively, followed by consumer loans 9.64% year-on-year. Sharia finance maintained high growth at 15.67% year-on-year, and MSME loan growth accelerated to 8.97% year-on-year. Moving forward, Bank Indonesia expect credit growth to increase in 10 to 12% range in 2024. Bank Indonesia will also continue strengthening the effectiveness of accommodative macroprudential policy and increasing synergy with the government, financial authorities, government ministries or agencies, the banking industry, and businesses. The result of Bank Indonesia's stress test further confirmed solid banking industry resilience in the face of various uncertainty risks toward. Bank liquidity remains adequate as reflected by a high ratio of LA divided by TPF of 27.79% recorded in January 2024. Liquidity management in the banking system is improving given large banking industry placement in liquid securities. Strengthening the pro-market monetary operation strategy has also bolstered the lending capacity of banking industry, which includes trading as RBI in the secondary market, thereby providing the banks with flexibility in terms of liquidity management. Capital adequacy ratio in banking industry is still high at 27.66%, recorded in December 2023, supported by low credit risk as indicated by NPL ratios at 2.19% gross and 0.71% net. Solid banking industry resilience is supported by sound corporate and household repayment capacity as demonstrated by improving corporate sales performance and improving expectation of household income. Bank Indonesia will continue strengthening synergy to mitigate risks that could potentially disrupt financial system stability. Digital economic and financial transactions continue to perform solidly, supported by a secure, steady, and reliable payment system. In January 2024, the value of digital banking transaction increased 17.19% year-on-year to reach 5,335.33 trillion rupiah, and the value of electronic money transaction grew 39.28% year-on-year to 83.37 trillion rupiah. The value of KRIS QR code Indonesian standard transaction enjoyed impressive 149.46% year-on-year growth to reach 31.65 trillion rupiah, with KRIS users and merchants totaling 46.37 million and 30.88 million respectively, dominated by MSMEs. The value of card-based payment using ATM, debit and credit cards totaled 692.33 trillion rupiah in the reporting period, up 2.58% year-on-year. In terms of rupiah currency management, total currency in circulation in January 2024 grew 9.21% year-on-year to 1,015.68 trillion rupiah. Bank Indonesia maintains a steady and reliable payment system supported by adequate liquidity. The secure, steady, and reliable payment system is also underpinned by mitigated liquidity risks and operational risks. Bank Indonesia also continues ensuring the availability of rupiah currency fit for circulation in suitable denomination throughout all regions of the Republic of Indonesia, particularly ahead of Ramadan and Idul Fitri 1445 Hijriah through the Serambi 2024 program. And by that condition, Bank Indonesia had policy mix just to maintain the BI rate. BI policy rate stay at 6%, and deposit facility rate stay at 5.25%, and also the lending facility rate stay at 6.75. And that will be the end of my presentation. Thank you for your attention. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi. Thank you, Pak Anto, for your presentation. So don't worry, guys. So our economy is still solid and robust, right? In 2024. So also I see a lot of digital business student here. So the economic, digital economy will still grow, and this is your future. Your future is proof. So it's good. So next, we are moving on to the third speaker, Pak Herman Sahiruddin. Pak Herman is the Director of Research in IDIC, or Lembaga Penjamin Simpanan Indonesian Deposit Insurance Corporation. He holds PhD from University of South Carolina, Darla Moore School of Business in Banking and Finance. So he published also several papers in reputable journal, including Journal of Banking and Finance. Please, Pak Herman, you also have 15 minutes to deliver your material.
All right. Thank you so much, Pak Putra. Assalamualaikum warahmatullahi wabarakatuh. Thank you for joining us in the sessions. Yeah, so please allow me to share several of our views. So because we are from deposit insurance, so I will, share several of our views about what kind of risk looming ahead, and then that we need to anticipate, as well as so how we deal with it from the viewpoints of deposit insurance, as well as from the viewpoints of Indonesia Financial System Stability Committee. So let's move on to the next slide. All right. So first of all, I would like to whatever the risk looming ahead. So the most important things for any nations is to have a strong financial safety nets for their financial industry. So we have seen from the several crises that happening during this last 3 decades, that on every crisis there must be lessons that can be used to strengthen the financial safety net to anticipate the future risk. So one of the lessons that keeps coming up is that regulators need to anticipate the future risk, not only just to follow up the risk that already happened and caused the past crisis. So that is why we know in Indonesia we just enacted the new law. It is omnibus law, law number 4, year of 2023. We call it the P2SK law. So basically, this omnibus law changed many laws that concerning the economy and the financial industry. So the purpose of the law is to develop and strengthen the financial industries in Indonesia to support the economic growth better in the future, while maintaining the financial system stability, given that a lot of development ahead, like for example in terms of technology, which makes the financial industry becomes, I would say it's more opaque, because we have fintechs, we have crypto assets and other things that maybe our knowledge about that still actually relatively limited. Yeah. So what lies ahead, the technology are coming to us like tornado. It's a very rapid, especially it's being catalyzed by the COVID-19 pandemic, so that we are forced to shift how we live every day, and with that of course coming new challenges. So in general, this is the setup of the financial safety net in Indonesia. So the financial safety net in Indonesia is actually coordinated by the 4 institutions. So those 4 institutions are coordinating in a committee called the Financial System Stability Committee, or KSSK. So basically the members of this committee are Ministry of Finance, which they are the fiscal policy authority, and then Bank of Indonesia, like Wianto already mentioned before about the comprehensive policy mix that Bank Indonesia has. So Bank Indonesia focusing on the as a monetary authority and macroprudential policy authority. And meanwhile, OJK, the Otoritas Jasa Keuangan, they are the financial services sector regulators and supervisory authority. They're focusing on the microprudential sides. And last but not least is the LPS, the Indonesia Deposit Insurance, which we are focusing on conducting the deposit insurance scheme for banking industry. And 5 years from now, and we are still in the middle of preparing it, is to provide as well the insurance policy guarantee. We do conduct also the bank resolution program as well as the liquidations of troubled insurance company 5 years from now. So basically, this is just an example how these four institutions are coordinating each other. It will depend on the shock though, whether the shock comes in from the banking industry like in 2008, even though that at that time 2008 it was a global financial crisis, which actually the impact is not compared to the impact on the advanced economies. Actually, impact on the Indonesia are relatively manageable at that time. With the good policy, we can survive the 2008 global financial crisis without going into recession. But this is the how the financial safety net members coordinates when we face the economic shock. So this is just example from the last shock that comes from exogenous shock, the infamous Black Swan COVID-19 pandemic. So basically, to deal with the economic shock that like the COVID-19 pandemic, so basically the response comes from macroeconomic scope and both from the microeconomic scope. From the microeconomic scope, the fiscal policy will, they expand the fiscal deficit and things like that, give a lot of social transfer and things like that to, maintain the economic condition at that time. And then meanwhile, from the monetary policy side, from the Bank Indonesia has done a lot. Bank Indonesia, reducing their benchmark rate to the lowest ever in last decade, and then they also did a quantitative easings, as well to loosening the macroprudential regulation at that time. And from the microeconomic scope, the OJK, they provide some relaxations to the operationals as well as the relaxation on the credit restructurings, which will end at the end of this month actually. So as well as they increase the supervisions and coordination with the financial service sectors firms. Meanwhile, in this from our side, in deposit insurance side, so we maintain that the coverage of our deposit insurance are still intact. So basically, our deposit insurance coverage right now is covering around more than 99% of the number of accounts in Indonesia. And other than that, we also keep close coordinations with the OJK, with the Bank of Indonesia to make sure that, if anything happens, so that, those nets are, cannot stop any bank failures, then deposit insurance can step in and do the bank resolution fast. So fortunately, during that time, the number of bank failures are, there's no significant bank failures at that time, just rural banks. It's just business as usual for us. And until today, we have resolved 129 banks so far. This is actually quite a relatively small number, given that in totals our banks are 1,600 is rural banks and we have 105 of commercial banks. So this year we have just handled around 7 rural banks. So it's a business as usual for us. And then we make sure that we pay the depositors' claims in a fast way. And these last several years we also coordinate with BI and OJK to increase the usability of big data, what we call it as a single customer view, so that we can easily, identify and do the set of these depositors. Are they eligible to be paid or not? So that's from the viewpoints of the banking industry. So let's move on into the preparations of the second program that just mandated by us in year 2023, which is the Insurance Policy Guarantee Program. So the Insurance Policy Guarantee Program in the law, so basically what we are covering in 5 years from now, so we are given a time to prepare a reliable insurance guarantee scheme. Meanwhile, our fellows in OJK, they are now they're endeavoring in strengthening the insurance industry. They make sure that the governance are well, the practices in the insurance markets are also going better, and they have more capital. Again, capital is our angel during bad times. So that's the first one, and then in the law, it's said that the insurance policy guarantee, we focusing on guarantees the protection element of insurance products. So for those insurance products that have, that are more complicated because they have a protection element and the investment element, this should be marketed to those that are literate in diversifying their personal wealth. So again, because insurance contract that is like unit link, it's a complicated products. So it has to be marketed to the, those people that understand what they are, right? And then, so for the social insurance program and compulsory insurance programs, actually they are excluded from the policy guarantee program conducted by LPS because they have another arrangement. Because they are a social insurance program and compulsory, they are backed up by the state budget, actually. So that makes sure that there is no, double covered in this republic, so that we can manage it more efficiently and effectively. So that's show all of the view on the Indonesia financial safety net and then the role of deposit insurance there. So one notable change in the Indonesia deposit insurance is, can you please go back to the our mandate? So the mandate to Indonesia deposit insurance actually also developing. So we start in 2004 as a Paybox Plus deposit insurer that insures the deposit sides of the banking industry. So basically, when the deposit insurance or when the LPS was enacted, it's actually formally ended the era of blanket guarantee. So basically, the LPS was enacted to give a balance, to strike a balance between providing, maintaining the trust of the banking industry depositors on the one hand, and then the other hand, to mitigate the moral hazard by increasing market disciplines. So that's why we exist at that time. But at that time, it's pretty simple. When there's a bank closed, then we just pay the depositors and then we liquidate the assets. It's a Paybox Plus. Even though that during the, we can also do the temporary equity injection like what we did in 2008. So and then 2016, we can do some contemporary resolutions strategy like purchase and assumptions, as well as bridge bank. And lastly, so we increased to the loss minimizer, our mandate at that time. And now, starting in 2023, Indonesia Deposit Insurance mandate is a risk minimizer with integrated protection scheme. So we cover both the bank sectors and then insurance sectors. And then we are risk minimizer because now we can, have an information and coordinations ahead of any bank failures and coordinate with the OJK so that we can decide what kind of strategy to resolve, for example, these bank failures or in the future about the insurance failures beforehand, so that we can make sure that when the bank happens, nobody going to panic. All right, so before I end my thoughts, so basically one thing that is interesting right now are in discussion relating to Professor Bruno Sergis materials, because right now the the digital technology is increasing. So we are concerned in deposit insurance at two things, at least two things. So first is the leverage of social media, like what we have learned before because we are academia here. So the deposit insurance was effective theoretically according to Diamond 1983 GPE paper, that it prevents panic bank run, right? With the social media, so this panic bank run becomes more easily. The informations are really fast right now. And then the real example was in 2023, the Silicon Valley Bank in the United States it was failed because of this run-up from the Twitter. Even the Wall Street Journal called it as the first tweet bank run triggered. So the first tweet triggered bank run. So this makes us in deposit insurance as well as in the OJK, Bank of Indonesia and Ministry of Finance, we realize that supervisor now, it's not enough to just look at the financial reports and then go to the the off-site monitoring, but we also need to look at what are people discussing around, right? Because we have to mitigate this risk. That's the first one. And then the second one, with the ubiquitous presence of deposit insurance around the world, now I think it's around 147 as of March 2024, deposit insurance around the world. So basically run by retail depositors are not relevant anymore because they are covered regardless, whether the bank fails or not. But the lesson from the SVB failure 2023 is that what we need to anticipate is what if the run is triggered by the uninsured depositors, those big depositors triggered by the social media. So we have to think about this. So several options maybe, the skimpy deposit insurance might not be the option anymore. But again, I'm not saying that is this one or that one is more correct, but I think we need to rethink whether, in the past, some people say that deposit insurance in Indonesia are too generous. But now, 2003, yes, last year we also talked to Professor Stiglitz when he came to Indonesia. He thought the same, like right now, we need to rethink about these uninsured depositors, especially during the crisis times. If the crisis times, and then we have a social media, how to mitigate it. The other option is to the extraordinary liquidity facility like what the United States have done in 2023 until now, the bank term funding program. So basically, it's a repo to the central bank, but the collaterals is valued at the book or par values. It works. So it actually it helps United States to mitigate the impact of the SVB failures without the need of increasing deposit insurance coverage. However, now they also, if you read the Bloomberg News like last week or so, the Federal Reserve right now is also considering to make the Federal Reserve discount window policy becomes mandatory because they want to get rid of the negative stigma from that, liquidity facility. So I think every countries have their own, variations of how to deal with that. In Indonesia, starting 2023, so actually, aside that, Bank Indonesia and OJK, Bank Indonesia that is a monetary policy side, and then from the macroprudential sides, as well as the lender of the last resort. And now, so actually in a very dire conditions, and by request of the OJK, EDIC can also provide temporary fund placement to a bank that are, that are solvent, but they face liquidity problem. So again, there are so many variations in every country, but I think what we need to think about is that every country has, their institutional factors. There is no like general formula that applies to all, but the things that we agreed on is that strengthening financial safety net to anticipate future risks are, it's a must, right? And again, no shotgun approach, and we keep learning on what we are doing, and so because that's why the discussion like today is very important to all of us. So again, thank you very much for your attention. Look forward for your questions. Back to you, Pak Putra.
Thank you very much, Pak Herman. So it's very interesting to see how the LPS or IDIC is transforming until now, even more with the new law, right? With the so-called financial regulation like omnibus, financial omnibus. So it transformed. It's like right now insuring the insurance. So that's a very, very, interesting topic to discuss, insuring the insurance, and how, managing the challenge of social media, panicking or something like that. So thank you, Pak Herman, for your sharing. So we move on to our neighbor countries. Neighbor country, Pak Prof. Siong Hot Lo. So Prof. Lo is a professor of economics at University Putra, Malaysia. It's one of the best university in Malaysia. So he holds PhD from University of Leicester in UK. He published more than 124 papers in many reputable journals. So, Prof. Lo, so still you have 15 minutes to deliver your speech. So please.
Ya, thank you Dr. Putra. Ya, salam sejahtera dan selamat siang Ibu dan Bapa yang saya hormati sekalian, mahasiswa UNS. A very good afternoon, ladies and gentlemen. Thank you for having me, and this is an honor to share the topic about the Malaysian government strategy to face the global economic uncertainty in 2014. So I think, can you please show my slide so that I can share with everyone? Yeah, so I think I'll start with the COVID-19 pandemic, and also the Russia-Ukraine war, as well as the Middle East crisis, the conflict. We can see that it's quite difficult for us to predict or to have the outlook because it's very tough for experts to see into the economics crystal ball. Now we can see this statement is according to the former IMF chief and also the France finance minister. So it's quite tough to forecast the outlook now. So okay, this is the outline of my presentation. I will focus on the Malaysian government strategy and policy, and the second part will be the Malaysian macroeconomic outlook 2034. So I will focus more toward for a country, a single country perspective. So this is not any empirical paper. So the next, I need to press the next. So the Malaysia is a small economy. So the degree of economic and financial openness mean that is not immune from the global economics uncertainty event. So the Malaysian economy resilient and has been reinforced, and the country is now on the stable growth path due to the political stability and also thanks to the diversified structure and strong fundamental throughout time, because we have learned from the 1997, 1998, as well as the 2008, the global financial crisis. The economy will remain robust and also resilient as long as the policy encouraging aspect are maintained together with the solid policy and action plan, as well as the ongoing execution of the government practical measure and effort, as well as reform. I think this, the second slide is to measure the Malaysian strong financial sector, well-developed capital market, the solid foreign reserve, low inflation, the favorable labor market condition, current account surplus, and the high national saving all contribute to the country continue economy momentum. Even while the external sector is still significant, the home demand, especially the domestic consumption, is now they play important key role of to drive the economic growth. So I think this is the okay. I need to press the go down, move down. Yeah. So this is the a histogram to show the ASEAN 5 plus the Vietnam GDP growth. This is the quarterly data from the quarter 1 in year 2023 to quarter 4 2023. So Malaysian growth is about 3.3 and 3% in the quarter 3, quarter 4, whereas in the case of Vietnam, Indonesia, and the Philippines, they achieve higher GDP growth compared to the Thailand and also Singapore. So Malaysia is ranked about around 3.3 and 3% for the last 2 quarters in the year 2023. Yeah, so this is the GDP per capita growth. It's a time series data from I collected from the World Development Indicator from the year 2015 to 2023. So you can see that the economic growth for Malaysia is 3.7%, whereas the other country achieve 5 and more than 5%. Indonesia, and then followed by these Cambodia, and also the Philippines, as well as the Vietnam. Yeah, and then in terms of the 2021, we noticed that the Singapore have achieved 7 point. I think the figure is a wrong figure. It's not 13.52. It's about 7.6% growth. Yeah, compared to other countries. So the Singapore have a higher growth rate in the year 2021 compared to other countries. And I plot in the diagram. So you can see I have adjusted for the same scale. Maximum is the 15% and negative 15 is the minimum percentage, so that we can compare across all these 6 countries. So Singapore have the highest growth in the year 2021 due to mainly due to driven by the finance, the manufacturing, finance and insurance, and also the wholesale trade sector. And for the case of Vietnam, it shows it's a positive. They wouldn't achieve a negative growth in the year 2021. Yeah. So due to the Vietnam case is special thanks to the strong economic fundamental and also disease containment measure and also well-targeted government support for the case of Vietnam. And the Philippines has the lowest negative growth for the case in the year 2021. So I would like to share about the Malaysian government strategy to deal with this global economic uncertainty in 2024 and onward. So the economy Manani was launched by the Prime Minister in July 2023 in order to build a better Malaysian together, and the objective is to ensure a sustainable and prosperous nation. So the government is committed to fostering inclusive and sustainable growth, so that all Malaysians can benefit from this policy and enjoy the wealth and also prosperity of the country. So taking into this consideration, the foundation of economy Manani has been introduced, Memperkasa Rakyat, or empower the people, was developed with the people need as its the top priority. So the new industrial master plan 2013 and so the midterm review of the 12 Malaysia plan is like a long-term 5-year plan. Yeah, and so the national energy transition roadmap introduced all recently announced policy will be built on this Manani framework. So the framework have focus on two main objectives. The first is to restructure the economy, and the second, improve the quality of life of all Malaysians. So this concept or framework is to be implemented through the whole of the nation approach, which require the mobilization of resources and also the collective effort from various stakeholders. This include the government and the non-government, the GLC, mean that the government linked company and the non-government organization, NGO, as well as the people, to achieve this target. So the government emphasize on enhancing two main thrusts. The first is the rising the saving mean to strengthen the economy and also grow the wealth of the nation, and the second is rising the floor to ensure that quality and the equitable benefit for all. So in terms of the short-term target, the government try to address the pressing issue affecting the people and also the businesses. So the first one is to speed up the first one is to speeding up the implementation of project, especially the critical one, the school and also the clinic. The second is to erasing the hardcore poor through the rollout of the initiative, especially the income initiative, the people income initiative, to provide opportunity to increase and also diversify income that enable financial independent and also resilient. And the second strategy is the Payung Rama or umbrella of mercy. This is the concept has also been carried out or introduced to ease the financial burden of the people and also continue to be strengthened in the addressing the cost of living, because the cost of living is a main concern of the people. And then these are the medium term target by the government. The government has set 7 goals for the nation to meet in the next 10 years. In this regard, the first one is the first one you can see is to become the top 30 largest economy. The second is to become the top 12 in global competitiveness. And then the third one is to become the top 25 on the Human Development Index. And then number 4 is to increase the labor share of income to 45%. And then number 5, improve the Malaysian position in the Corruption Perception Index to top 25. And then number 6 is toward the fiscal sustainability, targeting deficit of 3% or better. And the last one is to increase female labor force participation rate to 60%. So hopefully by using this strategy, the country can achieve the higher economic growth to 4 to 5% in this year 2024 as a result of this policy or the activity. Yeah, so the main thrust, there are two main thrusts here. The Malaysian would like to become the leading Asian economy. Like you can see this the economy structure require a transformation from a labor oriented to the more high skill or high technology intensive in order to increase the wages of the worker. Yeah, mean that we need to have the knowledge-based economy, more innovation, in order to increase the wage of the people. Yeah, and also the second one is elevating quality of life for the people. So they emphasize on building a more equitable and prosperous society with the fair distribution of income. So the growth for the focus number one, you can see there are several focus here. The first one, for example, we would like to link with the regional Asian ASEAN agenda, and then let's say they will move to the Commonwealth country, the APEC country, yeah, and other like say the United Nations, yeah. And number two is the Malaysian as an investment destination and international local startup for SME, and then the leader of the global Islamic finance or economics, and then the more micro entrepreneur and also the informal sector, green growth, and for the climate resilient land use and the food security. And for the focus number two, the Malaysian would like to find more job opportunity with the meaningful wages, equal opportunity, social protection for all, and healthcare service due to the COVID-19 pandemic. So the healthcare system need to reform, and the healthcare service reform, educational and human resource reform. So many things need to reform in the country. And then the infrastructure and the public transportation and the basic facility as well as the affordable housing price for all the Malaysian. So this is a framework by this economy Manani. So you can see that in the middle part, we would like to succeed the require and all the of Malaysian approach, like the people, the government, as well as the industry to work together. So this is the spirit of the unity, good governance, and also the collaborative public delivery system. Then the good governance to restore confidence is very important and crucial. So the efficient public service delivery system from the foundation to gain the trust of all the stakeholders, to support and undertake the collective action toward the require transformation, and then the structure and the institutional reform of the parliament and media and the public services will strengthen the government and the institutional capacity. So a responsive public service deliberately supported by the digitalization agenda is imperative to drive the economic growth and economy transformation. And then the government will also need to focus on the progressively enhancing the Malaysian physical sustainability by implementing the various the revenue as well as expenditure strategy. So a more sustainable, efficient and targeted subsidy mechanism need to be identified. So what kind of the mechanism need to be implemented pertinent to address the linkages as well as the weightages. And then the 12 Malaysian plan is a long-term, is a 5-year plan. Yeah, so we need to review the plan from time to time to rectify if anything is not follow the goal. So the 12 Malaysian plan here include the medium term plan with the objective achieving prosperous, inclusive, sustainable Malaysian. Since it implemented this 12 Malaysian plan has successfully achieved their target. However, due to this the COVID-19 pandemic, and despite experiencing the several global and also domestic challenges, the plan continue to review to see the optimum result. Yeah, so the need to rewind from time to time this the 12 Malaysian plan, and also to strategize in line with the economy Manani concept framework to regain the honor and the dignity of the people and transform the Malaysia into the prosperous and the high income nation. And this is the.
So, Professor, you have 1 minute left.
Okay, thank you. So you can see this is the action by this 12 Malaysian plan, and then this is the outlook. I think I will quickly go through the outlook. I think this is the final part. So going forward, the growth of the Malaysian economy will be driven by the domestic expenditure with the support from the E&E, electronic and the electric export recovery, and the household spending also important, and the tourist arrival, the tourism industry also play important role, and continue the progress of multi-year infrastructure project. And then we have therefore the prediction for the economy in year 2024 is 4 to 5%, and the CPI is about 2.5 to 3%, and the OPR is the interest rate is remain at 3%, and then the physical balance is a negative 4.2, the public debt 62.7%, and then this is the Malaysian economy 2024 outlook for the demand side and the supply side. So still we can see that it's still the private consumption play important role as well as the export of goods, and the supply side is the services as well as the import of the good 30.3%, and then we have the so this is the Malaysian set to improve, especially better prospect in terms of the global trade to promote economic growth, and the good governance to take the place as well. And then we have on track to hit the targeted social assistance, and then the domestic financial condition also remain conducive to sustain credit growth as financial institutions continue to operate with the strong capital and also the liquidity buffer, and ensuring the sufficient or enough liquidity in the market. And then is the headline now is the inflation, whether the inflation will remain the same or of course will be affected by the government policy and also the world. Then in terms of the conclusion, so the goal of the economy Manani framework is to advance the Malaysian economic growth, to increase the people standard of living and also the income, so that they can enjoy the benefit of the economy, encouraging more inclusivity in the income distribution, and then to promote the overall economic growth. This national strategy is anticipated to preserve the value of the cohesion and sound governance underpinned by the flexible and the cooperative delivery framework. So to successful implementation of the short-term and the long-term plan, plus the economy Manani framework, will bring back the Malaysian economy as one of the Asian important economy. I think that's all. Yeah. Thank you, everyone, for your listening. Yeah. Thank you so much, everyone.
Thank you, Professor Loh, for sharing with us with the concept of Malaysian Madani and how Malaysia face the uncertainty. So, right now, it is the end of the parallel session. We will open the question and answer session for you. So it is time for you guys to you can raise your hand if you want. So we have 1, 2, 3. Wow, it's a lot of questions. So so this part one, second part, and the third part. Okay. So community, please, you can distribute the mic to the students. This part first, yes.
Okay, good afternoon, Prof. Sergi. My name is Vikri Novian Pratama from Development Economic, FEB, UNS. I was lectured by Mr. Putra, Pak Putra. I want to ask you one question. According any resource information I read, they pointed geopolitical situation as main factor case economic situation in Europe 2024 and in the US. Is there any economic agreement both Europe country and US to face current global geopolitical situation to maintain and stability the economic growth in both countries? Thank you. That's all my question.
Okay, thank you, Rizky. So we asked about political economy that affect the uncertainty in Europe, the economy in Europe, something like that. So, and also in US. What do you think about this political economy problem in this? So we will take the second question first, then yeah, okay. Yes, yeah. So the second one, the second part. Yeah, that okay, Mas.
Okay, thank you, sir. For it's such an honor to speak in front of you guys. So my name is Firman. I'm from Economic Development, Faculty of Business. I'm sorry if my English is not good. I will try it. So here's my question. When I see on social media, on TikTok or Instagram, I see lots of people create videos like Bitcoin or cryptocurrencies will be the future of gold. So in one decade, Bitcoin has highly invested in around the world. So here's my question. Bitcoin will be the next goal or not? Tell us about your thought and your opinion. Thanks.
Thank you. So yes, next. That part, yes.
Thank you for the time. Good evening, Professor Lau. I want to ask a question about your presentation. Before that, my name is Ivan Alexander. I'm from Economic Faculty. I want to ask a question. Does Malaysia apply the meritocracy system like the Singapore does. So they push the racism away and push their people to their limit for their performance in their work. Thank you.
Can you repeat, Mas, the questions?
Does Malaysia apply the meritocracy system like Singapore
Meritocracy,
does?
yeah.
Yeah, like
Yeah,
does
meritocracy.
Singapore does.
It is specifically for Professor Low. So one question left. Yeah. Back. But yes, we need to hear the girl voice right now.
Good afternoon. I'm Ines. I'm a master student in management from Universitas 11 Maret. I want to ask a question related to the same. I was remember when I was working as a research assistant in a research institution. We had an agenda once every week for discussing and sharing about knowledge about all the economics. And at the time, in the end of 2022, we discussing about the economics expectation in 2023. At the same time, in 2022, there was a lot of news that economic in 2023 will be gloomy. Considering that at the time there was still a Russia-Ukraine conflict, and there was the world economic also suffering from the pandemic COVID-19 pandemic, and then my manager said that as economics we must think optimistically rather than pessimistic, because the things will actually happen. For example, when we think pessimistic about economics, the things happen, such as maybe everyone will saving more and more, and then limit their consumption, and then the economic will fall. And the question is, what is your opinion about this? I think it's really interesting to hear your opinion. I think that's all. Thank you.
So it's about the behavior, what you fear, what will happen, something like that. Yeah. Okay. So I will close this first session. So only 4 questions. So I think that I will give the floor to Professor Bruno to ask the question.
So the question is on the political economy in the European Union. It's quite a problem here today, because we will have the elections for the new European Parliament in June, coming in June, next June, that coming June. And the new parliament will appoint the new commission. I mean, there is a very, very hard to understand process behind the appointment of the president of the EU, president, and so on. And the war in Ukraine is exacerbating also the problems in Europe, to that extent that Germany is no longer the stronger economy in Europe, is slowing down very fast and is losing competitiveness. And Germany is a very big voice, Germany and France, the two, I would say, stronger political members of the EU and within the EU. So today, the main issue is about the green economy and whether to push forward a very strong, a very tight green economy agenda. And the current EU President von der Leyen, who who is running for being reappointed as the president, the new president, the next president of the EU Commission, is trying to reset the strategy. So still a green transition, but while before the green transition was thought to be implemented very quickly, today she is resetting the strategy, maybe following a more gradual approach. So this is the very big point of the political economy in Europe. And the technology. Yes, technology is a big field of analysis. Also, President Mario Draghi would like to at least advise the European Union on spending more money on technology. And technology is the second big part of the political economy in Europe. In terms of monetary economics, the European Central Bank is independent from the Commission. So it is up to the European Central Bank to set the framework, the monetary policy framework. So the Commission has no voice on, no input on the strategy, the monetary policy strategy. And in terms of fiscal policy, the EU budget is about 1% of the EU nation's GDP. So the European Union has a very small budget. So the European Union is very powerful within the EU simply because the EU is able to set strategies, rules that EU members must comply with. Otherwise, the ability of the EU to invest large amount of money is close to zero. Another big part of the EU budget is agriculture. And even in terms of agriculture policy, many people went on the street to protest the EU strategy, the EU agricultural policy. So I do expect that the new EU Commission will change quite a lot, also in terms of agricultural policy. But in terms of political economy, the new EU Commission will change quite a bit the strategy. Maybe we will implement a more gradual green transition. And but we need to wait and see the election outcome in June, whether the new parliament will be more right-wing or left-wing oriented. President von der Leyen is a member of the center, the Popular Center Government Party, and but she needed to be appointed by a coalition of parties. So we don't know yet whether the new government will be more left-wing oriented or more center-right oriented. We don't know yet. And this will make a difference in terms of strategy. Should the left-wing party win the election, so the Labour Party, the Socialist Party win the elections in the EU, maybe the green strategy will keep very tight, very strong, and with a very tight agenda. Should a right-wing parliament will win the elections, right-wing parties will win the elections, maybe this will be more gradual, a more gradual green transition. So this in terms of political economy. But on top of this, keep in mind that the EU budget is very small. It's about 1% of European Union GDPs. And there has been quite a lot of debate on whether to increase these national contributions to the EU budget to more than 1.1% of GDPs. But right now, this is the story. So the EU will be, and is very powerful when setting a strategy, when setting rules that the national countries have to comply with. Otherwise, it's not a so powerful government in terms of fiscal policy. Thank you.
Okay, thank you, Prof. So the next question is about Bitcoin. So I think that we have Bank Indonesia as a regulation of payment system here. Like to answer, Pak Anto?
Thank you for the question about Bitcoin. Bitcoin is some kind of Bitcoin is some kind of money, but that is not really money because it is issued by the private entity, not by the central bank. If we refer to Indonesian law, the only institution that is allowed to issue currency is Bank Indonesia as a central bank. So we can consider Bitcoin as a commodity. Why Bitcoin appear in the community right now? Because it is used to make payment for a digital transaction, like digital in e-commerce or other kind of transactions digitally. So we are now in the process to prepare digital currency that is issued by the central bank, by Bank Indonesia, but we are still doing research and doing some comparison with other countries that will implement, so that in the future we all can do transaction in digital world with digital money. But actually right now you all already use the digital money. Remember when you do transaction with your m-banking, mobile banking, it means that you change your money from real money to digital money. So you can transact in Tokopedia, transact in GoPay. So actually you already use your digital money right now. So in the future, we will try to make that digital money is issued by the central bank. For now, what you use for the transaction using your mobile banking is the money is issued by the commercial bank, not by the central bank. That's about the Bitcoin. If you consider Bitcoin as a means of investment, I suggest that you can invest in other instruments, not in Bitcoin. You can buy securities, you can put your money in time deposit, so other people in real sector can use the money to improve their businesses. So it will give more benefit to the economy. Thank you.
Thank you, Pak Anto. So, yes, we will wait. Digital rupiah, perhaps. So next to Pak Hirman, maybe Pak Hirman can answer the questions about the expectation. I mean, like sometimes the public figures, ministries say that next year will be, will be dark year or something like that, and it happened or it not happen, something like that. So, what do you think about the, forecasting or something like that?
Yeah, I believe we all learn about expectations. So what actually said in the media, so it's basically not all are gloomy. So we need to be aware that sometimes media tend to make bad news more exaggerated. So meanwhile, for the good news, sometimes it's a bad news for them because no news. Good news means no news, but bad news, sometimes they fall it like several times. So it's important for us, to look at the economic forecast as something that is, it always have two sides of a coin. So first, that at that time I still remember at the end of the 2022 how the economists, including myself, forecast the market in 2023 and similar like today when we look at the economy in 2024 and 2025. So the more I think a suitable term is we are cautiously optimistic. So why we are still optimistic? I wish I could show my heat map to you, but if you look at the Rifki, do you have it? The heat map of the global economic growth. So I'll show to you the data. So basically, why we are optimistic, especially in Asia, because if we compared, if we're talking about a global economic slowdown, it's actually more, now it's more pronounced in Europe, actually. So we have heard that UK already gone to the recessions, Germany is on the way to it. And then, several other countries are, they're facing a challenge in Europe because the war, of course, and yeah, you see from the table. So green is a more to the good news, and then the red is on the not so good news, right? I have to admit that I bias to the more positive, but again, cautiously optimistic. So we need to be optimistic because look at the numbers in Asia Pacific. Most of the economies, like also Professor Xiong's already shown in his table about GDP per capita growth in Asia Pacific. So actually, we are doing pretty well. And why is that? Especially for Indonesia, the component of shared in GDP, 50% more are in domestic consumption. So it means that the real power of GDP growth are you yourself. If you spend well, not spend all or overspend, because if you overspend, it will increase your household debt. That's the bad news. But again, if you spend well, and then not overspend, then you're actually helping the economy. And the second one, if you want to spend your money, spend something that is produced in Indonesia. That is clear, because if you spend it, you increase the consumption, domestic consumption, without increasing the import, which reduce the GDP growth. So because more than 50% of our economy share is induced by the consumption, and Indonesia, according to the data from the Ministry of National Affairs, actually now we have 280 million of people. Of course, it's still way below India, but we have a lot of people. So we have and now in our demographics, we do have a quite large demographic that we call demographic bonus in Indonesia. This is the power that we need to use to achieve a resilient economic growth. And then, so how are the expectation affect us? So if we expect that everything is gloomy and then we save, that is what happened in 2020 and 2021. It's not because everything is gloomy, it's because you cannot spend. You want to spend, you want to meet your fellows, but you can't, right? So basically, if you save most of your income, then the economy will go down. And then you can see that in 2020, our economy is negative, the GDP growth. So the question of paradox of thrift coming again. It used to be there is no paradox of thrift, and then it comes again after the pandemic COVID-19. So again, managing expectation is important. However, we as scholars, you or yourself, you are students. We need to see from the two sides. The real data, what the real data shows, and then the risk needs to be anticipated. So what we called about the geopolitical risk, and then the global slowdown risk, and then the other risk, including for example, like the high for longer risk. Those are risks that we need to anticipate. If we do not anticipate, we can grow. So example like, okay, you can bike fast, right? If you are optimistic to bike fast from your house to UNS, for example. If you are very optimistic, just go biking without seeing left or right, That's being too optimistic. What will happen if you do that? There is a risk that you get an accident. But cautiously optimistic is that you need to know what risks when you're biking. First, whether you're biking during the night or during the day. If during the night, the risk is higher. And then whether you're biking, your route whether it's a route with a traffic jam or it's actually a quiet route. So that is actually identifying risk while you're biking to the UNS, for example. So that is what we call by cautiously optimistic. So again, we are optimistic that in 2024 we can still grow 5% above. Again, conditionals on, that our consumptions and our investments are, increase well. Because the political uncertainty right now already gone, because it seems that the elections in Indonesia are already, almost concluded. Some economists say that that means the investment doesn't need to be wait and see. So that's several good news for us. But again, do not forget that there are risks looming that you need to be anticipated. So I think that's probably from me.
Well, thank you, Pak Herman, for your answer. So, last, Prof. Flo. So, the question is about the merit system, meritocracy, that Singapore, arguably using that system. So, is there any in the Malaysian or something like that?
Yeah, I think. Thank you for the question. I think it's a tough question. So far, I have never received this kind of question about this. I think from the perspective, the government realized that I think the brain drain, I think, is a serious issue. So I believe that the government also Malaysian government also realized that they need to maintain the talent in the country, not train the talent, then go to other country and develop their career and also generate the output in other country. So we have for example, we have the talent corporation to search for the talented human capital to come back to work in the country. But due to the system is not so convenient, so maybe after few years they will still back to the country, let's say work in US, UK or Australia and so Singapore. So I believe that the government know this issue, and then they will try to rectify, and then because with now it's different from the previous time, because the parent income is increased, so they can send to other institution, higher learning institution to study, not only totally based on the public institution. I think that's all I want to comment. Thank you for the question. Yeah, thank you.
And thank you, Prof. Low. So I think that this is the end of. I'm so sorry that this is the end of our discussion session today. So I would like to express my gratitude to each of our distinguished speakers, and also who graced us with your expertise, and also as well as to all of you guys here, the engaged participant, for your active participation. Thank you very much. So the success of the seminar lies of the talk and the eagerness from us to learn and to learn to each other. So stay until the end of the event. So last but not least, we will continue this collaboration when also we will learn again and again with the economic and the other event with the Center for Fintech and Banking. So thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Let's give a round of applause to our speakers and also our moderator. And now we come to the end of the session, but before we will have like the token of appreciation delivery, I will humbly invite the fourth speaker and also Professor Iftikhar Hasan to proceed to the stage, because the chairman of, yes, just come forward in front of the stage along with Professor Iftikhar Hasan also to receive the token of appreciation from the committee that will be delivered by the chairman of the FinTech Center, Dr. Putra Pamungkas. So please. So the first token appreciation will be delivered to Professor Bruno Sergi from Harvard University and also University of Malaysia, University of Messina, Italy. So let's give a round of applause to Professor Bruno Sergi. Thank you very much, Professor. It's not the first time coming to the UNS, but it's always a good opportunity to listen to the session of Professor Bruno Sergi. And the second token of appreciation will be delivered to Professor Iftikhar Hasan. Thank you very much for delivering such insightful and also very comprehensive explanation on the keynote speech. Thank you very much. And the third token of appreciation will be delivered to the Dr. Herman, the Director of the Research of the LPS, Lembaga Penjamin Simpanan Indonesian Deposit Insurance Corporation. Thank you very much, Dr. Herman. And we also will deliver it to the Bapak Dwianto Cahyo, the representative of Bank Indonesia, representative of Solo. Thank you very much, Pak Dwi. And last but not least, the delivery will be conducted to Professor Siong Hock Lau, PhD from the University of Malaysia. And let's have one big photo session with all of the speakers. So let's have a group of photo session with all of the speakers along the moderator also. Okay, so thank you very much. 1, 2, and 3. Thank you very much, all of the speakers and also the moderator and also the participants of today's International Seminar 2024 Economic and Finance Outlook. Thank you very much. So please return to your seat, and we request all of the speakers, yes, to return to the seat. Thank you very much. And that was the end of the International Seminar 2024 Economic and Finance Outlook, what to expect from the global economic in 2024. Organized by UNS FinTech Center, Universitas 11 Maret, and supported by Indonesia Deposit Insurance Corporation, LPS, Lembaga Penjamin Simpanan, and also Bank Indonesia. I'm Dewanti Chainingsi, on behalf of the organizing committee, would deliver and express the greatest gratitude to all of you. Hope to see you in the next event, and Assalamualaikum warahmatullahi wabarakatuh.